General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, so the midweek anchor point, it's been one sided. Monday highs the anchor so far. Weekly bias. Market is very bearish. We haven't found the floor yet. Note shifting framework hit rate. Price action has been terrible. Many case studies, no case studies. Time frame context review. So this is NFP week, options expiry week, the bar week, yes. FOMC kind of made this week interesting with this sell-off. Expansion mitigation signals, breaking and closing below the block, seeing weekly in the yellow, weekly volume imbalances, the blue, decision quality, low probability. Someone has been moving at real times. Like it'll move in Asia, it's probably moving right now. Narrative framework accuracy, a lot of moving parts right now in the couple market. The narrative is we seek your fair value for buy, experience success, success showing up and study. Case study vault reference. Probably week, the bar week, yes. FOMC kind of made this week interesting with this sell-off. Breaking and closing below daily order block, seeing weekly inefficiencies. Frameworks page, phase expansion, daily stand sidewide, confidence level low, reason. Hold on, there you go. Yeah, the plan engaged, so that was one of these click to engage. Entry point confirmed, not experience bells or something. Is expansion playing out? Yes, tempting to see today. I think the market's going to carry more volumes than what Kevin Walsh said. Showing up and studying, the failure would be to engage when you have that, because you can say anything. So, to rebalance the 4 The 200 full rebalance will be down here to rebalance the 4 all-time. Meta spent too much, that's normal. Too much, that's normal. And Microsoft did very well. And Microsoft, it's a nice stop on Tuesday. Here's NASDAQ on the H1. Like accumulation. I think this is getting AMD. Tuesday high is a good target. Yeah, so it should be accumulation vibes. Manipulation, distribution will be up here. Tuesday's range. Left Tuesday. Just this range. Stay in Tuesday's range. Left Tuesday week. Or this whole week. Tuesday. We're going back to Tuesday. See, it's beautiful with respect to SPS 500 on the daily. Beautiful with respect to this week low. We're going to H1. See, we hit this. It's a 4-hour order block. 4-hour order projection line. The projection line. It really is more like purge or revert. Purge this high revert. Validate what we did. Purge this low revert. Purge again. Validate the lows. It's beautiful order here. Here orders order here. Charts. If you this whole new week opening gap up, this is no sign to turn around, house. This is no sign to turn around. Just a nice good down day. Just a nice good. All the cues. Check out all the. This was an old IPTA 6. Heading towards the 200 or the 240. Yeah, old IPTA 60. Clean that up. Heading to 2026 open price. And then NVIDIA. Looking for buys in this still. Even with us coming back to 2026, it's the most bullish story out of all the stocks in the stock market. I'm still very interested in this because it has the most bullish. All this stuff now probably just push me down to attractive prices. Or AI, like the buzzword. So all this stuff now, there was no read on the week. No trade day, well sideline correct stance with the price delivery. A small money reversal, a solid anchor or a key on the final reaction with the price delivery. No clear idea. One interesting price action. If the wash is interesting, I think he'll be good for the markets. He's will play out. Yep. What do we learn? Wash is interesting. I think he'll be good for the market outs. Hard to believe that he ignores the charts. And that is all the work.